Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Now we're going to talk about an investment vehicle known as a Smart Beta ETF with our ETF Research Director, Nina Mishra. This particular type of ETF lately has been rising in popularity among retail investors, right?
Exactly. I mean, traditionally, the ETF industry has been dominated by market capitalization weighted products, which just replicate the market or a particular sector or a particular segment of the market. But institutional investors demand more than just market returns from the ETF portfolio, and that is why these kind of ETFs, which seek to outperform the market index, they were very popular among institutional investors, but of late the popularity of these products has been rising among retail investors also. And further, last year market returns were spectacular. 30% return by the broader market, and many sectors and segments return much more. So market cap weighted ETFs were fine. I mean, if a product is returning 30, 40, 50%, absolutely fine. But this year, most investors and analysts believe that market returns will be nowhere close to last year's levels. In fact, most analysts believe that returns will most likely be in high single to low double-digit range. So in a low return environment, I think the popularity of products which can beat the market returns will continue to rise.
And why shouldn't retail investors get the same benefit as institutional investors, right?
Exactly.
So what exactly is a Smart Beta ETF?
Behind the fancy name, it's just a better stock selection methodology. So some industry specialists, in fact, do not agree with the word smart. They prefer to call these alternative or advanced beta ETF. So they just try to select stocks which have better chances of risk-return performance. And these can vary from very simple equal weighted indexes to fundamental weighted indexes to more complicated volatility and momentum-based indexes. But I think for retail investors, it is better to start with products which are easier to understand. Simpler methodology.
Okay, that makes sense. Now, as always, you've brought a couple of examples here with you. One is the iShares MSCI US Quality Factor ETF. Boy, that's a long name.
Long name. The ticker is QUAL.
Right.
And this ETF is based on the investing concept that higher quality stocks perform better in the long run. So it seeks to select stocks based on three fundamental variables: high return on equity, low financial leverage, and stable earnings growth.
I see.
Charges a very low expense ratio of just 15 basis points. Currently, it holds 126 securities in the portfolio, with Google, Exxon, and Apple being the top holdings.
Some big names.
Yeah. It was launched in July last year, and it has returned about 14.4% in the last 6 months compared to 10% for the broader market represented by S&P 500.
Okay, and then there's the Barron's 400 ETF.
Yes, the ticker is BFOR, and as evident from the name, it tracks the Barron's 400 index. So this ETF seeks to provide access to 400 of America's best performing companies within one ETF share. It follows a rules-based index which seeks to select stocks on the basis of 24 fundamental variables across growth, value, profitability, and cash flow. And all those 400 securities are equal weighted in the portfolio, so there is almost no company-specific risk. Slightly more expensive, it charges 65 basis point in expense ratio. Now, this was also launched last year, in June last year. This has returned 13.6% in the last 6 months compared to 10% for SPY. And I would like to add although both these ETFs are new and they have outperformed the broader market in the last 6 months since their inception, but their indexes were launched a few years back, 5 years back, and the indexes have been outperforming the broader market index since their inception. So I expect these two ETFs to perform well going forward too.
So that's a little bit of reassurance for the investor, the underlying indexes that support these ETFs.
Exactly, although these products are new.
They have a better track record.
Yes.
Looking back. All right, do you own either of these two?
I don't.
All right, you can have a gander at other ETF articles and commentary and just a whole lot of ETF information in the ETF section of our website, Zacks.com. So if you're watching this video in syndication, get on over to the homepage and you can link to the ETF section right off the homepage. Meantime, with Nina Mishra, I'm Terry Ruffalo.